Welcome to TMS News in Review, July 2013. It's Jeremy Hook and Ben Clark presenting at this time of year about what's been a good recovery to start the month and the financial year, Ben.
Yep, pretty volatile start to July. Of course, Ben Bernanke indicating that they will start tapering QE, which we generally saw as pretty good news. Really, it means the US is recovering stronger than expected. However, it did cause a fair bit of volatility in a lot of different asset classes, but that seems to have calmed down now. Equity markets seem to be recovering, so all going well. And a rocky ride for the Aussie dollar as well.
Well, that seemed to be the way I read the end of the year. It was a bond market issue predominantly, where the crowded trade was reversed, and the equity market, being the small part of the global financial markets, was the most hit as a smaller market. Nothing to do with equity markets generally. In US reporting season now, we expect reasonable things, but not huge things. And I guess looking out to our own reporting season, something good there. And in terms of stocks at the moment, you like a couple at the moment?
Yep.
QBE?
QBE. So QBE had an investor update during the month, actually late last week. And the news for a change was pretty good. It's the first time I haven't seen a profit downgrade in a couple of years now. But you got the weaker currency, rising US bond yields. They're cutting significantly back on costs. Premiums, prices are increasing. All the tailwinds, headwinds that have been hurting the stock for the last few years seem to be reversing. And I think it's probably going to report quite well. And you can sort of see it pushing up towards $20. So it's
which is still well below its all-time highs.
Way below where it was.
So, good quality, 20-litre stock.
Yep.
And it's on the improve.
That's right. Yeah. And IMF, that's had a bit of a pullback. It's on the recovery as well. It's one you like, Jez?
Yeah, IMF's a very interesting stock, and not like a lot of other stocks on the market. Now, where we like to look at for a company is earnings growth. This has got a lumpy earnings stream. So one of the disappointing announcements that came out just at the end of the financial year sent the stock down. And it was taken as a disappointment. I don't think it is a great deal, but they've got a case against Lehman Brothers, which won't occur in the financial 2013 year, but in fact move it over to the current financial year, 2014. That seemed to upset the market somewhat. The size of the case has been increased, and it doesn't actually reduce our valuation on the company, which is 220. It's trading in the 180s at the moment. And if you can get it near our 180, I think it's a pretty good buy there. Expecting about 10 cents a dividend in August. So it's a very handy dividend yield for the stock.
Yeah, and recovering pretty rapidly at the end of the month.
That's right.
Up pretty quick.
And it shouldn't have gone down as much as it did. So that's good.
Well,
another one that's come off a bit, but is good value now after a great 2012, Seek.
Yep. So Seek's been a big favourite of mine. I've got to say, the ANZ job advertising survey that came out showed how soft the employment market is locally. And I think that's the main reason why Seek's come off. And I think job ads are down about 30% this year. So the domestic side of the business, I reckon, is struggling. However, the monopoly that they have will, I'm sure, mean that they're continuing to offset that partially by passing through price rises and finding new ways to charge, just as someone like a realestate.com has done. And it's a company that historically has reported strongly in earnings season. And what we're really looking for is an update on the floater Xiaoping, which is the Chinese website they majority own. The international side of the business is the growth side of the business. A lot of these international websites they own are just starting to turn profitable. So there's still, hopefully, years ahead as that sort of gathers pace. So,
and their business model for getting into these countries is excellent, the way they get a small part, and once it's proven a successful model in that country, they increase.
Yep. And they did that recently, actually, in a couple of countries in Africa, I think.
Yes, I saw,
just small little investments.
That could become something quite large.
Something pretty big, And finally, Soul Patts had a bit of a pullback through the month.
Yeah, it's funny how some stocks trade, and that's classically a low volume stock, but it's an all-time favourite of TMS, and it's one we've bought, for years and years and years, and followed with Rob Milner, the CEO and MD, for a long time. But when it's pulled back from about $15 to around $13 and a bit more at the moment, it's trading around $13.20. It's a good opportunity to buy it, and for people who don't have it, it's one that we really look to get into. So they again tend to over time do a little bit better than the market. They don't waste money on merchant banks. They do their own work. Got very strongly performing divisions like TPG, and overall a group that we feel very comfortable owning in good size.
Yep. And like the Milner family recently buying a fair bit of stock, around $15.
Yeah.
And although the coal division certainly will be struggling at the moment, you'd think the brickworks division would be rapidly picking up.
Due for turnaround and well placed for what ought to be a recovering sector.
Yep, definitely.
So overall, good start to the year. We've got some good ideas and a good opportunity, and we'd welcome anybody to come back to us with any questions.
Absolutely.